Oh, there's Kentucky. We go. Hi, Chris.
Justin.
So about to have a phone conversation here later today with the person who backed out of 2 deals. And they're gonna want to tell me how awful we are. And I'm gonna tell them how bad they suck at life.
And you'll be best friends afterwards, right?
Mm-hmm.
Okay, great.
Thankfully, Robin thinks that they're entitled to commission, but isn't willing to sue over it. So I don't have to have that difficult conversation.
Not even.
Well, yeah. This is the branch office. All fine. Paid in cash.
Okay. Every 20 miles, I had to get into one lane.
So. Are we broadcasting here?
We are.
Nothing.
Nobody's on now.
Where are we gonna go?
I made it.
They have three. Here's the thing.
The season. I know. It's not snowing.
Yeah, what's going on with the district?
With social media.
Yeah.
Well, I did something to the canary guy.
You don't have that.
Up to the page.
Touchy,
And almost everything I ordered was missing an ingredient.
There's
Yeah.
some menus in there.
They're on the sodas, they're on a lot of stuff.
Yeah.
This already has that.
Yeah. It does. One afternoon, I should say. Okay. I know you don't.
You live 3 miles?
Your agreement. The whole shebang.
Spent so many years commuting when I first. Yeah.
Man.
Yeah.
I think that's the way it goes.
It was. Yeah, you meet everybody. There's gotta be a different word for that. That's like super
Or
cute.
whatever it is.
You used to
And
be
then-
closer to school. How far are you from school by it?
It's bad, right?
Your fault for taking.
I don't know there, and I'd even buy that.
Dr. Middle, you lived in Middletown.
Well, I mean, and just
Camp
Camp Hill and lived in Mechanicsburg, came to Harrisburg.
Take 2, they're cheap.
And then finally I moved to Carolina. So, yeah, I'm 3 miles away and I love it.
Well, I wake up and I curse it. 6 p.m. on Saturday night. What am I doing in here?
Oh, your home office.
Lock the door, get out of here. Yeah. Oh, they're out.
Hey,
How are you?
Pretty good.
Some food in the back, like there, sounds. Oh, you already got it.
Thank you.
Check out this big golf, whatever. Thank you.
Oh, look, you have to clean it right now.
You're still.
Go in with the other side.
You're still. Well, we put it up top so you can see everybody. We want to leave anybody out.
I'm short, but I'm not short enough to hide behind you.
What? But even with
She just got back, so I felt.
Poor Christy.
Folly.
Yeah, she was here earlier.
Because the summer, that's right. Yeah.
There, it has to go.
Stuff come through.
Get a certified, get a certified copy from the county. And then- I know, I was wondering if the salad was gonna give me an apple. I'm already doing it.
Yeah, absolutely. Yeah, I was getting like boxes of cookies on the side and I'm like, super overkill.
Oh. You won't eat them at all. Eat the rest of tomorrow. Probably.
Make sure my pants fit. Can't be even thinking to- I just have a clothing problem.
Exactly.
Yeah.
I'm guessing mostly like. Right now.
Yeah, I don't go by the scale or anything. I go by what I just put in the pants.
Like art and everything, and like it's not over here. But then like throughout the entire summer, they do like studies. They do prevent. They do like in half the year. Prevent rain. Yeah. Yeah. and then they always do us that part of their- Yeah, yeah. Yep, they start.
Well, she used to do. Things
There's
like $20 hours.
here and there. I don't think as much as they used to. Just because the workers for one and then. it's people who have cars. It just makes it fun to see them. That's the fun part. about it.
In your cabin?
You don't even really have to-
Okay, we'll work on it.
Sometimes they do like, you know, campground.
$5, stress me out.
It stresses her out. She just calls.
Hey, Julie, can you hear us okay?
It is.
No.
Yep, I can hear you.
Like texting the team, like, what do you got?
Can you hear us now?
I can hear.
Okay, good. We can hear you too. I just wanted to put you up on the big screen. Your head's only this big.
It's only that big.
It's only that big.
Hey, how are you?
Anyone?
There's some lunch up here.
You're missing Panera Bread. See, if you'd come down here, you'd go.
I should have done that.
We haven't perfected that technology yet. Charlie and the Chocolate Factory tried. You know, with Mike TV, and they sent the Mike TV over the TV, you know, waves.
Yeah.
Now we have welcome to our SDP. See, yeah, it fills your passion. So.
I think Sandy, I'll come here.
Thank you.
Yeah.
Excellent.
Remember that with the chip Charlie and Chocolate Factory? Mike TV, and they kind of brought, like, they did a chocolate bar, go across the road, and they go up there. The old, you know, there's like.
Right.
They were big. Yeah.
Oh, they're cool. There's- I bought the bio was 11 days. But I didn't get it. I paid like $300.
Oh.
I've only gone to three nights, but I think I can
Why did they cut? Was that,
go back.
oh, really?
Don't be pull back. But it's all, it is very good, like Gladys Alray is one that's on here. It's like- Big one. Yes. Yeah.
Yeah.
Oh, I don't have. Yeah. Yes. What's your?
So you just right there. Where I'm sorry, I don't know. Oh, hey, how are you? Hi, sorry.
Meet you.
Right now?
Well,
Good afternoon, everybody at home. Do we have people at home? We have Julie.
Two.
We had some more RSVPs. They may trickle in here, but in the interest of respecting everybody's time, we'll go ahead and kick it off. Thank you, Titan, for putting together a training with Stewart. And here we are. Take it away.
Hey, everybody. Sarah, of course, thank you for coming out. We're really happy to have Brian Foley and Bill Himmelreich here from Stewart. We're going to go over a couple of items, and then there's also going to be an opportunity for everybody to ask me random questions or, current title issues you might be running into, anything like that. So have lunch, and thanks for coming.
You want to do a little bit of enhanced first? Does that make sense? Do a little bit of the enhanced policy or no?
So Bill Himmelreich is going to start off, and he is the state manager actually for Pennsylvania, also part of underwriting. Bill is great. Anything you have to ask. So you want to start off with
Yeah,
enhanced?
why don't we start with the enhanced and
Start with something
we'll see
basic.
if there's any interest in talking about it a little bit and
Yeah,
we can go into the tax sale side.
I know that on our end, we get a lot of questions from your buyers calling in and saying, what is this? What does it mean? And there are ways that we can put it simply. So yeah, whenever
Okay,
you're ready.
I'm ready. I had 2 bites of cookie and I'm ready to roll. Where's it best for me to be, or does it matter for the home folks?
See the picture in the top right hand corner?
Okay.
So just come this way.
Cameras on top of the TV. There you are.
Oh, there you go. How do I look the slimmest? That's what I want to do.
Turn sideways.
Turn around once, let's see.
Yeah, that's right. Yeah. Yeah. How do I look the slim, lose 40 pounds? So that would help. So, all right, we can put up the control on that.
I do.
I have to send it to them. I didn't get it from just yet, so I would.
Well, let's talk about it in general. My name is Bill. You can see this is an informal presentation, so raise your hand at any time, ask questions. If it's off the track a little bit, that's fine too, from what we're talking about. But I do want to talk a little bit about the enhanced policy. Let me start with are you guys issuing the enhanced at all? You are, is that your default policy or is it only upon request?
For home buyers, it's default, yes.
That is the default policy.
Mhm.
Okay, all right. And I will tell you that I think that's a good thing to do. The enhanced gives you the maximum coverage. And are we gonna try to put it up side by side? Okay,
Well, I'll hand them out. I did email to Chris with the large file, so it may take a minute to get there.
okay.
You have both.
Here we go. We have it. Yes,
So I just gotta share it, so you can know.
Oh, good.
Okay, let's,
It's in.
all right, so what Brian's handing out, what's going to be on the screen. The enhanced has been around for 20-some years, and it has become kind of the default policy for a lot of title agents. From a realtor standpoint, I think it's a good idea that protects the realtors. Let me see, you're all realtors, is that correct? So make sure I have the demographics right. This is the best thing for you guys. So let me explain where the danger would lie. If a client of yours says, which policy should I get? Never asked that question, but if it ever did come up, and you directed them to the old standard policy, and if there ever was a claim that would have been covered by the enhanced and is not covered under the old standard policy, and if there's a lawsuit, you guys are going to get dragged into. That's the reality. So the key here is that the enhanced gives not only the consumer the maximum protection, but it gives you guys the maximum protection. And that's the important element here. Now we can go side by side with the differences. We would have to insist that you have Coke in your beverage because it's a little dry. And it's not to say that you need to know all the differences, but if we can go to the next slide, go to slide down a little bit, and it's the differences, what is covered in the enhanced that is not covered in the traditional policy. And one of the other key selling points of the enhanced that it actually goes up in value, which the old standard policy does not. So that's another thing of a selling point. Now, from a negative standpoint, it's 10% more expensive than the standard, and it gives you a little bit more endorsement coverage. But I will tell you that it's, I think for your protection, it's money well spent. And what you don't want to do is get into a position where you have to explain the differences between the policies. The consumer doesn't even know what title insurance is, right? I mean, they don't know it. So you want to make it as simple and easy. If someone questions you, what policy am I getting? If they happen to know that there are two, to say this gives you the most coverage, the most protection. And I think it's money well spent. The extra 10% is not a lot, especially if you remember, you only have to pay for title insurance once. If you own the house forever, you never have to pay for it again. So the extra $100, $200, whatever it is, I think it's money well spent.
And Bill, one thing that just came up recently, I was at another office doing this presentation. There's a lot of ads lately. Have you guys seen the title lock ads? This policy offers post-policy forgery. And that's what this title lock product is all about. So you're getting people, William Shatner and these famous actors on TV, title lock.
Yeah.
And, one guy was like a former senator or something, I forget who it was, but this gives that coverage, post-policy forgery. So someone comes in, forges a deed and transfers it out of your name. This has a coverage for that.
It has it built in.
Well, you then can make a claim against your policy if you are a victim of title fraud. Someone taking your property with your deed, talk about on those TV commercials. This policy gives you an ability to make a claim against that. It's definitely minimal, but it's buzzwords, and once you start seeing TV ads, you know,
They
let's
scare
reverse
you.
mortgages for a while, now it's the TV ads with the title lock. So this is another selling point, you know, you're getting it for pennies on the dollar.
You know, that, the amount of fraud, and I was born and raised in Philadelphia, so I can rep Philadelphia. The amount of fraud that goes on, in the city is just phenomenal. People are stealing titles, all the time. And, give you an example, if I were to die in Philadelphia, Brian could come, go to the register of wills in Philadelphia and say, I'm Bill's closest kin, open up an estate for me, sell the property, pay the inheritance tax, take the proceeds and run. And no one would ever question whether, you know, how close to the kin are you to Bill? They'll just accept that, sells the property and off it goes. So, you know, and, you know, I can always talk about fraud that goes on. You have to believe it is rampant, and the bad guys are always looking to try to find a way of stealing your title and also get into your accounts. And that's not only your personal accounts, but certainly in the, you know, from your settlement trust account to your accounts at the office. So always being protective of the fact that somebody is trying to get into your account at any point. So
To your point, how often does this occur? Some of these instances, maybe 1 per 1,000, but when you're one of the one, you're just, like, oh, Jesus, how can this happen to me? Coverage.
yeah, so from a selling point, the most important thing is it's the maximum coverage, protects the consumer, but it protects you guys too. So I would say that it's a good idea. You can go through, you know, this checklist has the things that, and there's the post policy coverages in it. The enhanced also has mechanics lien coverage built into it. If you have, do any of you deal with new construction? If you do, mechanics liens is a major part of it. So I would say that we don't want to issue this automatically for new construction. We need to make sure that there's no mechanics liens that get filed. Mechanics lien law is crazy in Pennsylvania, makes it very difficult. But this is the essential elements on here. You have any initial questions, or you have any problem with you know, your customers or clients question you about it at all? If you're doing it, go ahead. Yeah, are they?
No, I was gonna say.
Yeah. No, but I would say that, you know, I will promote this, that it's a good thing. Okay. All right, if there's no other questions or we think of it later, just stop me and we'll come back to it. But I do want to reference it because this is becoming more and more prevalent, that people are using this particular policy. I like the fact that it's a default. What process, if I may ask you guys, you send something out in advance to the customers and you say, this is your policy? That's pretty much how it works.
Through Qualia, we send welcome information to them. And for example, I took a call from a buyer today that got their, we just call them the welcome doc. So we give them a heads up about wire fraud and things to look out for. We also send them information that, you know, tells them they're being offered the enhanced policy, goes over what it is, that type of thing, and then they can call in if they have any questions. But yeah, we do let them know right up front, and then we do issue the commitment to everybody so they have a copy. As well.
One of the things that you mentioned that is happening more and more, and it's not necessarily our obligation, but you should know about it, is the consumer, the buyers are depending on you, all of us, to get through this process. And you'll probably put on your email that says that our wiring instructions will not change, right? You've seen that? Well, the consumer doesn't necessarily understand what that means. So we've had a number of losses where an email that looks exactly either like coming from you at you as the realtors or you as the title company that says, please wire your money to this account. And I will tell you that those emails are pristine. They are absolutely pristine. You can't tell the difference. So as part of what you do with your client, reinforce that the wire instructions will not changed. And if you get something that indicates a difference, please notify somebody and start inquiring. We've had $50,000, $75,000, $100,000 in deposit money get converted to the bad guys and consumer debt. So it's very, very scary. And the quality of the work that the bad guys do is phenomenal. They are so
No, broken English, it was,
Yeah.
it was so easy, you're like, oh, this is a joke.
yeah. But now I'm telling you, it is pristine how they get that. So, okay, any other questions about the coverage? You guys issue it. I think that's a good plan. You basically take the thinking away from the consumer, issue that as your default policy. You're doing the right thing for your customer. Okay. All right. We'll go to the next thing. That's right. Okay. We're going to talk a little bit about tax sales and what's involved. The first slide, and did they ever print out this, Brian? Or we're just, okay, all right. This is the procedure with how these tax sales work. So you don't pay your taxes, it goes through the process for a certain amount of time. And this is where, this is the timing on when it occurs. Let's go to the next one. Okay, now, there are 3 types of tax sales. There is an upset sale, a judicial sale, and a repository sale. Okay, let's go to the next one. All right. Now this is the upset sale. Now, the basic aspect about an upset sale is that the taxing authorities will put the property up for sale. Now, if someone wants to buy it at the upset tax sale level, they'll come in, pay the taxes, but they will get the property as is. Okay, they're buying it subject to any liens that are out there. So if you have clients that specialize in this, they're going to get a title search done, and they're going to say, okay, I can get this property that's worth $100,000 for $5,000, and there's a judgment or there's a mortgage for $10,000, but I'm willing to buy it. At that point, it's worth it, because there's enough equity in it. I'm going to pay the taxes and pay off the liens. Understand that when you buy it, it's subject to all liens that are of record. Okay, now let's go to the next one. Now, this is the key point at the bottom here. Every sale shall convey title under and subject to all liens, estate tax, mortgage, ground rents, anything that's open against this property will stay if you buy it at an upset tax sale. Now let's go to the next one. Okay, now this is how I make a living in trying to underwrite the risk of insuring this. So if you're involved with any upset sale, this is what we as the title company are going to ask you. Okay, we will not insure without a quitclaim deed from the party who lost the property at tax sale. Quitclaim deed, for those of you, it's normally when you do a transfer, it's probably a special warranty deed. It has warranty language in there that says I warranty that whatever title I have, I'm going to convey to you. When it's a quitclaim deed, it's kind of as is. There's no warranty in a quitclaim deed, but we want the former owner to sign off. The other thing that we will require is a quiet title action against the owners who lost it at the tax sale and any other people holding a judgment lien. A quiet title action, in case you do not know, is you go into court and you try to prove that this title should be mine. A quiet title action takes about 4 or 5 months. You have to advertise. You got to get lawyers involved. I'm a lawyer, so I can rip lawyers. This is what a quiet title action involved. So it takes about, there's a lot of advertising. It may cost $4,000 or $5,000 in legal fees, 4 or 5 months in time, but we will require a quiet title action. Okay, so that's, it's in order for us to ensure this, that's what we would require. All right, let's go to the next.
Hey, Bill,
Yeah,
how, all the ones you see, how often are you able to accomplish that quick claim and that quiet title?
not very many times. It
Right.
doesn't happen a lot.
Because usually on these upset sales, time is pretty, the pace is pretty quick. So they don't have time to get through that stuff.
So you won't see too many, but I want you to make you aware of the differences. If you get involved with a property that's going through it, these are the questions that we're going to ask for an upset sale. We don't get too many of those transactions.
So most often, the investor's gonna be buying these kind of without a net. There's probably not gonna be any kind of title insurance involved.
Correct. Now, lots of times, and that's an option too. They might just say, you know what, and to your point, they're saying, you know what, I'll take my chances. Eventually I'm going to fix it up. I'll flip it, but I'm not going to worry about title insurance aspect. But I will tell you that it doesn't happen very often. You're not going to have too many transactions involving the upset sale. Any questions?
Look on the flip side of that, if someone does fix it up and tries to resell it and then trying to handle it that. all that.
Not going to be able to get insured. Now, that they may be working in strictly cash, because any lender that's a purchase money mortgage lender is going to want title, unless they jump through. We're going to go through a judicial sale. It's a more common way that these properties are purchased insured. Okay, so yeah, this is the process. A little dry, in terms of how they go through it, but it's what's necessary in a judicial sale. Let's go to the next slide. Okay.
I'll fix it.
Is everybody all right at home there? Did the TV fall on them or anything? We're assuming you're okay. All right. So we will not insure a judicial sale unless the following things occur. Now, confirmation that all procedures were properly complied with. Now, we have people in the courthouse that do searches, and we have examiners who will look at the process. That's something that you will not necessarily, you have to do, but it's something that we will do, okay? And that applies to the second part. It's a determination that all interested parties were properly noticed. So anybody that has a lien or a claim on the property, the former owner, they have to get notice that, oh, by the way, your property is going to be sold at a judicial sale. Now, the third part is that we will go into court and get an order to sell the property free and clear. So what happens is you go to a judge and say, look, I want to buy this. I paid the taxes. I want all these other liens gone. And the court will say, we agree. Because the court's job is to try to keep the money coming into the tax bureau and the property moving and have somebody else pay the taxes at this point. So we would get an order to sell free and clear. And the fourth part is that we will want to wait for at least 1 year from the recording of the sheriff's deed. Now, that's not a statutory rule. That's not a case law. That's kind of the custom of title insurance, that we'll want to wait a year from the time that the sale has occurred. So it's not to say that I haven't insured things that are 10 months or 11 months out. I'm not telling you that I will, but the title industry pretty much waits a year from the time of the sheriff's sale before we will approve that. All right, that makes sense? Okay, let's go to the next one. Okay, now the next one, it does not happen a lot. What will happen is that if the property goes to upset sale, nobody bids there. Then it goes to a judicial sale and nobody bids there. or nobody wants to go through the process of getting a free and clear order, the next thing it'll do is go into a repository, okay? And once, basically at that point, the county has said, we'll take whatever we can get for this property and let it go. Most deals are resolved at the judicial sale level. It doesn't go, into this level very often. It does happen. We want to make you aware of it. But I would say a very, very large majority of the tax sale process gets resolved at the judicial sale level. That makes sense.
I think in repository, a lot of times it's vacant land, it's that corner lot that has bushes overgrowing, that nobody really wants anyway. So that you're not gonna find like a $300,000 mansion going into repository.
Yeah. Now, lots of times, investors will come in and, like to Brian's point, and buy the vacant land. They think it's a good deal, and they realize they have to pay the taxes, they got to insure it, and then they just let it go. And that's what happens in it. But again, I want you to know that this repository sale, what happens with it, you won't see these very often. Now, we are getting a lot of judicial sales and tax sale processes, deeds and things like that. So it's important that you know enough about this to know what's involved in case now the investors, if you're dealing with them, they know this process, right? I mean, they live this and they know what's involved. But pretty much these are the rules in order for us to insure it. Now, let's say you have an investor, right, and still wants title insurance. Well, I'm not sure that the title insurance policy will have so many exceptions in it. If they don't go through this process, I'm not sure it's really worth it to them. Some say, look, I just want something from the title company that says that the person selling it is able to sell it, and that I'm going to buy it. I'll take all the risks that's involved. But they're not going to be able to flip it and get a lender involved unless there's going to be title insurance. And the lender's going to say, we want title insurance. So we can do it for a cash buyer and say, all right, you own this property, but we're not taking any responsibility. Okay. All right. I think that's pretty much.
We talked about this a little bit before. Chris has mentioned to you that a lot of times people buying these properties are investors. They want to fix up a little bit, but they've got to rent it.
Yeah.
Get a year or two of rentals in it. And, and that's not a bad position to be in nowadays. Rents are sky high. You're going to be able to do well with it. You don't have to worry about title insurance because you're just renting the property out. Because that's what people will say. Well, geez, if I buy this in judicial, so what's the point? I don't want to sit on it for a year. So you think, okay, well, what can I do with it for a year? Yeah, rent it out for a year, and then turn around and sell it.
Yeah, I mean, that's a good point that Brian makes. Lots of times they'll fix it up and let the year run by. We also have people that want to fix them up and take out the profit and move on. It's not going to happen in that year. Okay. And most of the time, the former owner who has lost it to the tax sale isn't going to be warm and fuzzy about, oh, sure, I'll sign it for a quick thing. Just they're gone. They're gone. Now, sometimes when I analyze the risk, now what we have to do is look at the risk. Is somebody going to come out of woodwork and challenge the sale? I'll lots of times ask you guys, and you're the ears and eyes on the ground, is the former owner still in the house? Because if they're still in the house, they'll have a tendency to try to fight all these legal proceedings. They'll go, you're going to have to take me out of here kicking and screaming. So that's an important element. If you know that they have walked away from the property, there's a propensity that I'll be able to say, let's insure it, let's take the risk. But that also applies to any lien holders. See, the lien holders have to get notice that, oh, by the way, we're coming up on a judicial tax sale. If you want to try to get ownership of this property, you're going to have to bid. And if you don't bid, you're going to lose it.
So they're all going to be noticed. I mean, if you look at the judicial sale file for each property, it will list the lien holders, the mortgage, credit card, whatever. So they've got notice. Now, it is important to scour that and see what kind of notice they have and see what kind of proof, because it's usually provided by a sheriff's deputy. And you want to make sure that you separately search the property yourself to see what's there, or have it searched so a sheriff can order from us. and then you compare that against the file, the judicial sale file, and make sure that all those creditors that turn up in the search are listed and they receive notice. And that's an additional piece of comfort, knowing if everybody got noticed, you can't come back later and say, oh, I didn't know. So here's the proof.
Certified mail, posting on the door, served subpoena by the sheriff or served processed by the sheriff or the process server.
Yeah, that'll be in the judicial sale
Yeah,
file.
and if it's not all there, this is why I don't have any hair left, because I worry about whether we can insure it or not, and that's part of my job to analyze the risk, that what are the chances that somebody's going to come back and do it, so. All right, any questions about tax sales? We have foreclosures on here too, I guess.
That's
Okay.
part of that as well.
And right of redemption in certain areas of the state, the former owner has the right to redeem the property within a year. You probably don't come across any of that out here. It exists, but this is part of why we don't want to insure anything within a year because of this.
And I think, wasn't there, it was like a little old lady came out of the woodwork 11 months after a sale. And the judge was like, yeah, you can't take this property from the little lady, and reversed everything. So
Yeah.
There's some reasoning why we wait a year. It wasn't just, we just throw a dart on a board and say, oh, a year sounds good.
And this is not just Stewart, this is the industry across the board. This is kind of our response when it comes to waiting.
Yeah, all the major underwriters follow the same. This office also uses Fidelity. They follow, we all come from the same cloth and treat things the same way.
All right, let's go to.
Sorry, do I understand this correct? So if something goes to sheriff's sale and I buy it, the owner has 1 year to say, no.
In certain jurisdictions, they have a statutory right to come back within a year. So they can go back in and say, to Brian's point, the little old lady says, well, I never got notice. I didn't know it. I lived in New York and I bought a property in Harrisburg and I never got it. And they can come back in 11 months after the sale and say, I want to take the property back. Of course, they have to pay the taxes, but they have a right to redeem. That's what that is. But
I get reimbursed then.
yeah. Now, one of the things, well, I'll make sure I'll put the note in the file. That comes off the top. It should be but because we don't want to mess with the right of redemption stuff, that's why we wait a year. Again, it's statutory in some counties, but it's a rule, just a practice that we wait for a year. Okay. All right, let's go to the next one. And we're going to talk a little bit about foreclosures. Are you finding foreclosures are starting to increase in the area? Yeah, no. I would have thought that foreclosures would have been a more rampant. They had the moratorium during COVID, if you recall, and nothing could be foreclosed for, it was basically a year and a half, 2 years that there was no foreclosures allowed. And a lot of people lost their job, as you know. So you would have thought that once the moratorium was lifted, there would be more foreclosure activity. And sure enough, wherever I go and I do this presentation, it doesn't seem to be that big. Now, whether people were able to make the payments, maybe with some of the federal aid that was provided, they were able to keep up with the mortgage payments, but there just isn't that much more, that many more foreclosures than pre-COVID. So, but it's important to know. Do you have any clients that deal in this world a fair amount?
Yes, and agents who deal with it as well. But I don't know if they might be getting diverted to another market where they're not coming to the open real estate market.
Yeah.
And they're getting scooped up at a wholesale level or something like that, but we're just not seeing.
Well, that's interesting. And I would have thought there would have been more foreclosures with the state of the economy. So let's go through this. We're being asked to insure a lot of properties statewide. That's what we do in terms of analyzing the risk of insuring a foreclosure. So basically, this is what the checklist that we go through. When a lender comes to you, a lender wants to be in a first lien position. If you ever hear this lingo being tossed about, a mortgage against the property has to be in a first lien position. Why? If they have to foreclose, they don't want any liens ahead of it. So what happens would be that if that lender forecloses, they divest all the junior liens, okay? So if you hear that lingo thrown at you, that the lender wants to be in a first lien position, that is why, okay? So what I have to do from an underwriting standpoint is I have to analyze the risk of that to make sure that there's no challenge if a lender ever has to foreclose. So some people say, oh, I'm going to pay off that judgment. Don't worry about it. I can't take that risk. If they don't pay off and the lender has to foreclose, then we've suffered a claim. All right. People ask me lots of times, especially you're at a party or something like that, oh, there's no claims in title. Yeah, there are. And there are a lot. Now, it's not like property and casualty or auto or any of the other types of insurances. We don't have the high volume. When we have them, they're substantial. So, did you ever get somebody, let's say, buying a home for $200,000 and the mortgage is $170,000 and they have $30,000 in equity? They ever say to you, oh, I'm not paying for that additional coverage for an owner? Do you ever get that? Tell them they're crazy, or have them call me and I'll convince them for that little difference between 170 and 200. It might be an extra $100 to have your equity position protected. It's crazy not to get owners coverage. But some people say, oh no, if the lender's protected, that's all that's demanded. Well, if there's ever a total failure of title, who gets paid? The lender, and the owner gets zero. So even though people, oh, there can't be that many claims, there are a lot of claims. Again, it's attributed to how much hair I have. I've got a lot of checks over the years for this stuff. All right, let's go through the foreclosure. So at the end of the day, we want to make sure that lender is in a first lien position. All right, let's go to the next. Okay, again, this is the checklist that the lenders go through. One thing that we always have to look at is number 3. If the IRS is listed, we have to join them in as a defendant. The IRS just can't get notice; they have to be joined in. Okay, let's go through the next.
Parties being foreclosed have an IRS lien against them.
Yeah,
You're going to see the foreclosure action say Joe Smith and the Internal Revenue Service.
yeah, and the IRS has all kinds of superior rights. Okay, again, this is kind of like the process that's involved. We don't really need to know all that goes into this. You have some big foreclosure law firms out this way that specialize in that. I mean, we have a couple.
No, they're all in Philly.
They're all Philly. They're all coming out of Philly.
Well, Leon Holler used to be a big one around there. It's doing James Smith. I think somebody should change names.
A lot of them. Seen Udrin. I think.
Udrin, yeah. Peter Udrin, I think.
Yeah,
They were
Mark
Udrin, that's right. Yeah. There used to be Fetterman
Cherry
and
Hill,
Phelan.
right?
Yeah, Fetterman and Phelan. They're now out of business because they depended on foreclosure when there's a moratorium. So that firm has collapsed. So I don't know who's doing Udrin is one of them. Okay, this is what the lenders, the law firms go through when they go through a foreclosure. Let's go to the next. Okay, again, they have to serve. If you ever hear this thing called 3129, it's an affidavit that must be filed that we have given notice to all the creditors that say, okay, we're going to go through a foreclosure. If you want to outbid the purchase money mortgage to buy the property, you're welcome to do it. So let's say, for instance, the property is worth $300,000, the mortgage is $200,000, and you have a judgment for $25,000. How are you going to get your money out? Because if they allow the foreclosure to go through, the $25,000 judgment will be divested, right? Okay. So that judgment creditor gets notice and says, well, if I bid $201,000 at the sheriff's sale, I'll pay off the first lender and I'll get the property. And then I'll be able to sell it and get back my $25,000. Now, usually, if a house is subject to foreclosure, there's not usually any equity in the property because, they may have mortgaged it at 80% at one point and they haven't paid it for months. And between interest and penalties, there's no equity. So you won't see this very well. Okay, so let's go to the next. All right, again, it's what we do to analyze this is we have to make sure that that all the notices were given. And it says at the bottom here, unlike tax sales, there's no right of redemption. So once that hammer falls with the sheriff's sale is complete. Okay, go to the next.
Can I ask a question?
Yeah, you sure can. No.
Where does like an auction property fall with like these different categories in the state?
Well, who's doing the auction? Is it, you're talking about the sheriff?
No, she's saying just like you just like a
Like
regular. I go to an auction house and say, hey, sell my property.
Some of the sheriffs do, but some of them, or like sometimes they do like things, some of the sheriff ones are online, but sometimes it's.
Well, the auction is really just another means of getting the property out there to say, okay, I'm having trouble selling my property. Let me see what happens if I just take the highest bidder, force them to come. So that's outside of this. Now, if there are some foreclosed properties that might be subject to auction, that might be, but that is just a different means of which to sell the property.
But in the foreclosure, don't they, isn't there a period where, it is in public and you basically, about to throw the hammer down, someone says, no, hang on, I'll pay.
Oh, yeah, at any time, somebody, hey, look, if, let's say you're $20,000 behind in your mortgage payments, you can come forward to the lender the day before and say, here's my 20 grand, we will reinstate my mortgage. That, it can happen at any point. But my point is that once the hammer comes down, you're done. You can't be saying, oh, I meant to pay it, or here's the check. That's a little too late at this point. Now, one of the things that we run into is that somebody who hasn't paid their taxes has also not paid their mortgage. And sometimes it's a race to the courthouse, who gets there first. And we have had claims where we don't know that the property was sold at a tax sale, and then we're being asked to insure a lender out of a mortgage foreclosure. So, it's important for us, and maybe for you guys, to be aware that if your clients say to you, or somehow or other you find out that the property is also behind in their taxes, to also check which one is coming first to go to a sale. Okay, it will happen. Okay, again, these are some more procedural things that the law firms will deal with that you don't have to worry about. Let's go to the next. Okay. Again, the purpose of these foreclosures is to divest the liens. We get calls from all the time about, well, what about the inheritance tax? Now, just so you know, in case you aren't aware of inheritance tax, when you die, even though you've paid taxes all your life, when you pay, you have to pay inheritance taxes to the state of Pennsylvania, Department of Revenue, when you die. Right? And the rate at which you pay is based on who the heirs are. So forever, whenever there was a foreclosure action, the attorneys would send something to the Department of Revenue and says, listen, if you think there's inheritance tax due, you come forward and let us know. And that's all we ever did. The property was sold. We never had to worry about inheritance tax. Well, about 5 or 6 years ago, the Department of Revenue said, no, you have to prove to us that there's no inheritance tax that is due. So if you're involved with a foreclosure and someone has died, we're going to have to deal with the inheritance tax issue. Now, I have argued with the Department of Revenue that, okay, who loses their property to a foreclosure and still has other assets sitting in their bank account that's going to be subject to inheritance tax? It doesn't happen. But the Department of Revenue wants proof that there's no inheritance taxes due. So if you're dealing with a decedent and you're dealing with a foreclosure, you're going to have to deal with a Department of Revenue. Okay, does that make sense? Okay, all right, next one. Is that it? No, that's it. Okay. So now let me tell you what our conditions are to ensure out of a foreclosure. Now, generally, I like to leave maybe 30 days or 60 days after the foreclosure to make sure that nobody's coming out of the woodwork and challenging it. All right. One of the questions I will ask you guys is anyone still in the house? Because we've had situations, have you ever had a squatter? You ever been in a situation where you had a squatter in a house, in a tax sale or a mortgage foreclosure? Now, the title people are not guarantors of use. You know, we just insure the title. But if we have knowledge that somebody's still in the house and won't leave, I don't want to get in the middle of their fight. So it's important to know, for us to know when we're underwriting this risk, that the people have left and there's no furniture, they're not still hanging there. And because if we have knowledge that they're still there and we don't tell that lender, we're going to get dragged into a lawsuit. I can tell you that. So it's important to know that the borrowers, the former owners, have vacated. Okay. But after the foreclosure, I like to wait 30 or 60 days to make sure there's no other problems. But we are willing to insure out of foreclosure. There's no 12 months. There's no redemption. We're willing to insure. So we will look, the folks in the courthouse, our examination team will make sure that notices went out and that the people are gone. We will insure foreclosures. There's no time limit after. Does that make sense? The difference between the tax sale and the mortgage foreclosure. Now, again, it's custom why we did this, not by statute. It's custom that the title industry in Pennsylvania insure it this way. Okay, so if you don't be intimidated by a property that's going through foreclosure, we're willing to insure it. All right, that's pretty basic on how we deal with stuff. You know, hopefully if you're dealing with a property that's going through one of these things, get to us as early as possible so we can review it. Yeah.
Do you see any regular pitfalls dealing with wholesale properties?
All right, well, give me a scenario of what you're talking about, just to make sure we're on the same page.
Okay, somebody, an investor, is buying equitable interest in a property so that the seller is not necessarily the owner of the property. They're going to buy the offer, let's say, buy the interest in the property for $100,000. So they offer the owner $100,000, turn around, resell the property for $150,000, and then collect that
Difference.
difference
What's the difference?
at closing as a consultant or whatever.
Okay. There's a lot of red flags
Sure.
with that. Okay. And I'm not saying that we won't do it, but what happens many times is the person who owns the property might be elderly, okay, and may not understand that somebody comes along. By the way, I really like you, older person. I'm going to offer you $100,000 for your house, and they are not astute enough to realize that the property is really worth $150,000. So you always have the theory of duress, you know, or some pressure that's being put upon that elderly person to sell their person for the cash to sell. I will tell you that if that elderly person goes to a lawyer and says, oh, by the way, some guy came in and gave me $100,000, but then I found out a month later the property got sold for $150,000. Clearly, it was duress on me, and they didn't give me the full information. So that's one of the risks. Okay. The second thing is that a lot of these wholesalers, they'll use the money from the new buyer to pay the first person off.
Correct.
So we've got problems with that because I think that there's really two transfers. And if I'm involved with that deal, I'm going to want a deed from the first person into the middle person and pay transfer tax. All right, and then a second deed from the middle person to the third person and pay transfer tax again. Now, paying that transfer tax cuts into your profit.
Right.
But if there's $50,000 in profit that can be made in your scenario, paying an extra $5,000, $6,000, whatever it ends up being in transfer tax might be worth it.
And from my perspective as broker, I see absolutely no issues with that two transaction scenario.
That is correct.
That's the clean way.
That would be a better way to do it than trying to jump from party A to party C. So if you get a deed that's signed by the older person and the grantee is blank, and they just fill in the name, we're not going to want to get involved with that.
I mean, and one of the other pitfalls, not to do with title, but in that scenario is if PA Department of Revenue gets wind of that, they could come back and go after that transfer tax in the middle.
And if the state is angry enough, they're going to come after the realtor to help that process, and they're also going to come after the title company.
And in the last 10 years, Department of Revenue has gotten involved in those. And they do audits and they get, records from their deeds and sift through documents. So we've seen that. It's probably the last 10, 15 years, you're starting to see separately recorded documents, people getting whacked with the transfer tax that they missed out on and having to come forward and pay it. And it's not just pay that money and we're happy. There's a lot of other stuff that can go along with that. Sniffing into other parties involved, maybe interest and penalties, maybe a lien. So there's a lot to it.
I'm not saying that all these wholesale deals are fraudulent, but there's a lot of fraudulent deals involved. Let's put it that way. And so I think each one is unique. I don't want to draw the line that says absolutely yes, absolutely no. But I think you have to look at each one. And
It's fertile ground for that kind of,
yeah, and most of these times the original seller's been in that house for a long time. They're vulnerable. They don't know what the value of their home is. Somebody waves a bunch of pictures of dead presidents in front of them, and all of a sudden they go, "Wow, I can get 100,000 for it," and without knowing that it's worth 100.
and I don't want to go down the rabbit hole, but I have one other kind of scenario that I want to run past you. So hypothetically, one of our agents may have represented a buyer in a flip property. Weekend they moved in, they may have had a situation at the house where the sewer backed up. Buyer digs in a little bit deeper, finds out that no permits whatsoever were pulled in the rehab of that property. I see on our handy dandy reference sheet here that there is the potential for $25,000 if you must remedy.
That's a deductible on paying the claim. That's what it comes down to. That's what that is.
Okay.
So yeah.
So they would pay us $25,000 to remedy or remove.
Now that's not going to happen a lot, and that's more of your problem than the title side of it is. But again, but I care, but that's not our job in terms of, but the problem is that if you have knowledge of this stuff, if there's ever a lawsuit, you imagine yourself in front of a jury or a judge saying, well, I may have known something about it, but I was.
Yeah, we found out at the same time the client did.
Yeah.
Lots of loud words.
Yeah. I'll tell you a quick funny story. I bought one of my first houses. This was back in 1985. I'm saying how old I am. And I kind of knew the seller, and he had gotten mixed up in some heavy duty drug dealings. And he actually was laundering money for the biggest cocaine dealer on the East Coast. It's a guy named, and if you ever want to do a little research on it, it's a dentist named Larry Lavin, Lavin. And he was a dentist, and he was the largest distributor of cocaine on the East Coast. And he used this guy whose house I play to launder money. He was in the title business. Now, what's the biggest problem for drug dealers is how you get rid of all the cash. So what better way of hiding money is through a title company? And that's what he did. He was my, so finally my guy was getting squeezed. He realized he better get out of town, and he listed his house for sale. And I was looking for a house in that neighborhood. And he goes, "Look, I'll sell it to you. I gotta do a quick deal." And I ended up buying the house. Well, I'm in the house 2 days. I'm starting to move stuff into the garage, and up in front of my house pulls a guy. Guy pulls up a big fancy car, and he gets out of it, and it's gigantic. Walk up my driveway. I'm like, "Oh, this is not going to end." And he's got a bag, carrying a bag. And the guy that sold me the house, his name was John. "Where's John?" I don't know. He moved out. I just bought his house. He goes, "Well, I got something." He reaches into the bag, and only my sphincter was going on at that point. He reaches into the bag and pulls out a trophy. And he goes, "I was John's son's football coach. I want to give." I'm like sweating. I'm like, "I'm gonna die." He goes, "You know where I can find him?" I go, "I have no idea. Thanks for stopping by." I'm like, I thought that guy. I mean, he was gigantic, and I'm thinking, oh, here I thought I instantly bought a house without any issues, and I still wonder whether I never looked for it, but I swore there was probably cocaine buried somewhere in my house or something like that. Never looked for it. But you know, and it ended up being a great house. I lived there for 20 years. There was no other issues. But let me tell you, it's a story. I can still see the guy walking up the driveway now. When he reached into that bag, that was the longest 3 seconds of my life. True story. I can't make that up. So, okay. Any other title issues that you're having, or just questions about stuff? I'm here. You know, I'll be glad to answer. I mean, we don't talk all the time. We're here to help you guys. Are there any kind of trends or issues or things you see on a consistent basis that's bothering you? Not a requirement to come up with it. So don't hesitate to ask, and appreciate all that you're doing. You know, Stewart is, you know, we've been around for 130 years. We've got a great staff. We're there to help
You
you.
don't have hair, 130 years, it looks pretty good.
I know. It's coming that way. It feels like when I try to pick something off the floor, I feel like 130 years sometimes. But anyway, I've been in the title business for it'll be 40 years this summer, and it's it's, you know, it's not the most dynamic in the world, but I really enjoyed it. I'm going to keep doing it for a little while at least, you know, until I don't do it anymore. So, and all right, so no other questions. I'll hang around for a few minutes if there's something else you want to ask, and I appreciate you showing up today. I hope this helped a little bit set up a flag for tax sales and foreclosures, and the expanded coverage. You know, you guys are doing it right. So, all right. Anything else?
That's it.
Can I keep the water?
Thanks so much, yeah.
I think I don't think it's very happy. Okay, I'll hang around for minutes if you guys think of something. If you want to ask a question one-on-one, I'll be glad to do that.
Drop down and change.
Well, thank you
Thank
guys.
you.
As always, if you have questions,
Thank you.
let me know. Yeah, it's nice for you guys to have a chance to talk to the guys that I end up talking to all the time when I say, "I'll give you a call right back." And I'm on the phone with these guys. Everyone,
I will tell you that our job is to do the best we can to make sure we can get these deals through. I mean, that you know, we all benefit by the sale happening. Not to say we want to take high risk, but our job is to find a way of doing it. And it works. So if you don't make any money, we don't make any money unless we go through. We'll try to do our best to make it happen.
Thank you.
Guys, awesome, thank you. All right, I'll hide in the corner if you want to ask me a one-on-one question. I'll provide an answer.
370.
Thank you, people at home.
Honestly, if anybody wants some desk plotters, you're welcome to take them, and mouse pads. And if you want the calendars, blotters, calendars, I'm old, whatever.
I was like, hey, didn't you call that?
And one more thing, I want to introduce, Brandy Lee. She is actually here with Titan now, and her first day in the office is today. So we all had lunch for her.
Just got off the phone. We got hotline, Chris.
Good. Mine's right.
What's that?
Okay, if somebody opts out.
Keep on doing the deal, turn them in later.
They don't. And some people that are available. Get them to find a way to do that. It's not them that. They're crazy.
I have to call Robin, Butts, clients.
Get them.